Welcome, everybody, to Calmness and Chaos. My name is Joe Fahmy, alongside my super awesome co-host, Mel Stone. How are you doing today, Mel?
Good. Excited to kind of join up with you. It's been a little bit while, but a lot of stuff moving in the market. So let's get into it.
Okay, and we didn't wear purple on purpose, correct?
Nope.
All
Nope.
right.
But this looks
Looking
good.
great. That's all that matters. So let's jump right into the S&P chart. And let's just talk about the overall market, then you can jump into some specific stocks. One point I do want to make, though, is a lot of people are getting frustrated because we're in a range, and I just don't want people to beat themselves up because it's not like it's been a runaway, amazing breakaway momentum market. The S&P is where it was 2 months ago, roughly where it was 4 months ago, roughly where it was last September, 7 months ago, and roughly where it was about a year ago. So we've been in a range, and we have to be open-minded to continuing in a range until we get some clarity, I think, on the macroeconomic picture.
Really good point. And when you start to look at it that way and you zoom out, wow, yeah, it's frustrating, especially for active day traders or anybody that's trading. That is some serious range.
Yeah. And one thing, I'm going to go through 5 quick tips of ways to deal with this range. And I would say, number one, if you trade individual stocks or even options, at least try to give yourself a shot. I'm more of a growth manager, relative strength, with stocks that have decent earnings and sales, maybe that have good unusual option or bullish flow. So give yourself a shot if you're going to trade with some of the stronger names, is my view, as one way to help yourself. Two, with entry points, because a difficult market won't forgive you for bad entry points. So you have to make sure to get those safer entry points, specifically meaning don't chase extended ideas. Number 3 is smaller positions, because when we are in this range, it can help deal with that volatility. Number 4, nothing wrong with having some cash, so that if we get maybe dropped to the lower end of the range, it can cushion the downside. And number 5 is, of course, manage risk. And that's not just a cliche. It's when things turn against you, you have to have a stop loss. And if things start to move in your favor, nothing wrong with locking in some profits as well.
I love that. That's like really, really important because we are not trending. This is not the time to put on size. This is not that easy market that some people were used to and think that it always will be. So some great points just going to help along the way. I love that.
Yeah, no, thanks. I mean, I think it's a lot of it is just adapting. We just have to do our best, because you made the point. It's not the same market as it was after the pandemic. So we just have to adapt to what the market gives us. But I'll lead into you with some of the things you're seeing. We'll start with SKYY, which is one of the cloud computing ETFs. I know you have some
Yes.
comments on a few of these tickers.
Yeah, so sometimes what you see and what you're able to find is that there's a man behind the curtain, kind of like Wizard of Oz. And that's kind of what I like to look at dark pool activity for. Remember, that's going to be common shares and it's a private exchange. So essentially, they're trying to get filled and not necessarily be on level 2. And that's going to be the biggest comparison. So a dark exchange is not going to have an open order book. Level 2 will show on a lit market. And in general, they're just kind of trying to keep order in the markets. But interestingly enough, SKYY, like you just don't see much here. And how awesome is it to see a sector theme, a very specialized ETF, cloud computing with 2.29 million shares at 64.27 yesterday. And that was some dark pool activity. So
That's a
it's going to be
big
your
print.
common
Yeah.
shares. Yeah.
Average
So
daily volume over 300,000, so over 2 million is quite the size on
yeah.
that.
And that's something that we look at and really does tell you the bigger picture. You're bringing up the average daily volume. You got that dark pool print in and of itself is 1,055% of 30-day average volume. And is that what you trade when you see that? And I always tell people, like, that's not liquid. That's not what you want to do. What you want to do is go look at the individual names. The
Okay.
individual names are going to be what gives you that leverage. And then you can start looking at options flow, your different charts. And when you
Before
look
we
at,
get into that, you mentioned IHAK as well, right?
yeah, yeah, IHAK the same day. So both of these came within it was all during lunch. I guess they think like people, I think they think we take lunches. I don't
Well,
think
I
we
take a 3-hour lunch, so you have to be more
I
specific.
know, I know. Like I'm like, what are you doing? USC. So IHAK, cybersecurity and tech. And this is the one I think more than anything that has my attention because it has just some of those like really, really good names, especially ones that you don't see very often. So IHAK, 1.59 million. And when you look at percentage of average daily volume, this
That's
is
less than 100,000 shares it trades. And what was the print? 1 point what?
1.59 million at
Wow. That's, yeah.
35.20. So that is 3,026. So you can see that on the chart. That's your pivot. That's your pocket pivot. That is your sign institutions are stepping in. And do we know if it's buy or sell? Not at all. But like look at that coming in at just such a beautiful spot on the chart. Like we're trying to hold that 200-day. We're trying to kind of base out here. You've got some digestion. It's not doing anything special or like way overextended. You're just very tightly consolidated.
Yeah.
And some top holdings here: Okta, FTNT, PANW, TENB, and Crowd.
Okay. So just to follow up, I love what you said about you don't necessarily have to trade these ETFs, but look into some of the components. And we did talk about PANW and FTNT in a previous video. Full disclosure, I still have a position in this one. I'm trying to combine strong earnings and sales where you get the fundamentals, where you have strong technicals, where it's building a big base here. You had all that put writing that you pointed out on Spaces a couple months ago along the way up. And it's been holding, showing relative strength. Knock on wood, I'm sticking with it. And it's a position I own because that put writing continues to come in and it continues to act well. The other one you mentioned, FTNT, I know you said that you spotted some more activity in this one today.
Yeah. So interestingly enough, this is kind of one of those that I think is flying under the radar. I don't know that many people even have this one in that basket. I know it was a newer name for me. We already had put writing coming in out to September. Today we had some more put writing, Jan 19, 2024. So a little bit more time here into the 60 puts, about 245,000 behind that. And you had some dark bull activity come in. But what I find really interesting is just that this is the second largest holding of that ETF. And this is where you can really start to get some leverage. And also, not all options flow is going to be directional. So some people that are newer to the market only think that you want to trade upside on Tesla and you get calls, and you want to trade downside, you get puts. It's not that way. A huge part of the market is some premium collection, being able to write those options. That's can tell you just as much, if not more, because most people don't even look at that. And so when you start to see only writing and put writing, which is could be some bullish put activity, it gives you like a different sense because not everybody's looking at that or knows how to interpret that. But
Correct.
it's
I
solid.
remember when it was in that
I
range,
prefer it.
you pointed out there were September 60s that were written in that range. And I love that expression you've used before, which is it's not necessarily like that call side of what you see. It's the stuff beneath the surface, bullish when they're writing puts and when they're the repeat flow. So after writing the September 60s, they come in now and write the January 60s. So it's just a good sign. It's just trying to do our best to increase probabilities. So I'm glad you spotted that one.
Absolutely. And I can't recall the last time I looked at the holdings, but FTNT is kind of, again, one of those names I consider a little bit more under the radar. I know a lot of people that follow growth are on that one, but I don't think it's like that household. Everybody's looking at that one, but
Right.
maybe it's one of those
Big
ones.
move, nice consolidation, approaching highs. It's a strong sector. You had a couple others in software. Snowflake, SNOW.
Yeah. So Snowflake today had some put writing, 721. So this is going to get us through ERs, which is really important to also take into consideration. We're about to be on the cusp of just every big ER. If you watch options flow, you will see not only puts, but also calls. The last thing that I want anybody to do is go, oh, options flow is going to tell me exactly this move. If you really open it up, you're going to see calls and you're going to see puts. They're going to play both sides. Think about that. A big house that has a, multi-share, million share position, it's going to go into ER and get some leverage. You just don't know the angle. You don't know what they're trying to do. IV crush is real. So if you are trying to play options around an ER event where IV is juiced because there's an event, there's earnings, the moment that comes out, that's gone. IV is part of the pricing of your contracts. So the moment that comes out, you have IV crush because now the news is out. It doesn't matter. And if you looked at a lot of things last time, it seemed like we stayed pretty flat, right? Like jump up, jump down, and like the next day you're like, well, that was nothing. Something to keep in mind, careful. Options flow is not necessarily going to give you that direction. And I think sometimes people play it with what they want to see instead of really looking at it objectively. And what they'd find is that it's usually a pretty mixed tape. You usually have positioning both calls and puts to cover that ER event.
Yep. No, very good point. Datadog was the next one, right?
Yeah. Datadog, a risk reversal. So another software name. This one's just been like kind of quiet, surprisingly, not moving in tandem with some of the others that have shown a little bit more relative strength. But you have the 519. It's a risk reversal, so a bullish risk reversal. They're going to write the puts. They're writing the 65 puts with 842,000 behind it, and they're opening the calls. Same strike and expiration, 65 calls, 1.48 million. So you're starting to see a little bit more of a theme, especially after seeing IHAK and SKYY. That's the kind of stuff that I want to look for. I want to see like, oh, hey, now what are we seeing come through in options flow after seeing that dark pool activity? And so it just kind of opens it up a little bit and shows where there's kind of where I want to keep my attention. And those charts look good. Maybe tech pulls back. It's had a great run. Microsoft, your main names, Apple, Nvidia, which Nvidia today had a very large sweeper for next week into puts. The 421 267.50 puts, 1.57 million behind that. There's not a lot of time on that. And so I like that it's shorter dated. I would like to see Nvidia pull back a little bit. But when I think about like the positioning there, it's interesting that they're just kind of positioning with that kind of size for something that would just be a natural pullback to the 21 to the 50, like something that would be constructive. It's not that they're going out to 2024 with like death puts, right? Like it's something that is just, if you really think about it, it's constructive.
Yeah.
It's short dated.
Yeah. I mean, it would be a normal pullback, with the stock after the big run it's made so far this year. So, and that's for April 21st. So speaking of which, regular cycle expiration is the third Friday of every month, coming up a week from Friday. And there's a lot of mechanics behind it, which would take forever to explain and so forth. But I just know the general trend is the week of expiration tends to trend to the upside. And you were going to discuss that concept really quick, right?
Yeah. So something to keep in mind that most people don't, it's very cyclical and there's cycles. Somebody that's been trading for like almost 30 years started to talk about pit bull low. And I'm not sure that's something that most people know, but if you actually start to take a look back, if you look at the Thursday and Friday before OPEX, you tend to make a really hardcore low, like you're pulling back. And essentially what happens is it becomes a buying opportunity to run into OPEX. But that Thursday and Friday is messy. It's usually that deeper red tape. And here we are, after Fed minutes, and interestingly enough, it correlates. But look up Pitbull low. It's something at least to be aware of because it just kind of falls into sync with what we have to navigate around options positioning. So something to keep in mind.
Yeah, I've read those stats, and I think some other people have talked about the Thursday, Friday before expiration or Thursday into the European close tends to be, as we know, nothing's an exact science, nothing's easy in the markets, but tends to be a good tradable low for the week of OPEX, the regular cycle OPEX. So I'm glad you brought that up because timing wise, it could work out. Maybe we see some upside next week. We'll see.
Yeah, for sure. Some
All
names,
right.
some names to keep, in mind, and we'll see what we continue to have come through.
Yeah, and one other thing I thought about is maybe if interest rates do come down, just they tend to be inversely correlated with some of those higher PE names where people feel comfortable with higher valuation names if rates are going to come down or if the Fed is going to stop. And like I said earlier, I just want to encourage people to keep your head up. When you least expect it, a really nice uptrend can come in the markets, but we just have to be open-minded to a range. But to your point, there's still a lot of individual names working with some decent flow. So,
Yep.